Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. We're having a special segment here with my good friend Joel Elconin.
Scott, thanks for having me.
It's great to have you here. I don't know if with T3 Live, most of you guys are watching, you've heard us together on Benzinga's pre-market prep. So I think today is a great day to have Joel here as he visits the New York City Trade Show. Is that what you're here?
Yep, that's why we're here. And Scott, we enjoy your morning calls and morning chats. Give our traders some ammo for the upcoming trading day.
Sounds good. And with that ammo for all the trading days, I think Joel usually has about a lineup of 15 to 20 different experts on what they're looking at, and what better time to talk about what he thinks some of his guys have been talking about, considering everyone's looking for a short-term top in this market. Everyone thinks we're overbought, but meanwhile we just keep going higher. So how are the guys or everyone that you've been speaking to lately, what are some of the things that they've been talking about that they're using as indicators, or are they struggling, or are they giving money away?
Everyone's looking for a top, Scott. I mean, that's it. This has been the most hated bull market. I don't care what people say. It's a hated bull market. We talk about the show, my co-host and I, Dennis Dick. We just talk about, the underneath demand in the market. We had one day last week, S&P futures opened 10 points lower. By the end of the day, you're green. Dennis comments on the show. It's like, oh, we're in the red now. But by the end of the day, just looking at the chart and talking about it, you're getting a few tops in the same area here, but it's just the same thing. We don't go down. You have the tops, 3 or 4 tops in the same area, and then you bust out and you start a new trend.
Well, I know exactly what you're talking about, because we'll stay on the chart. I remember last Thursday, it seemed as if we finally could have a breather. Okay, we've been in this accelerated uptrend that we've been talking about, basically since we took out the descending channel here when, Donald Trump got in office. Okay, that was really the inflection point of this entire additional rally. That's when we opened up lower, we engulfed it, took out this descending trend line, and then we've been above the 8 and 21 days since. So short term, and no one wants to feel like they're chasing the market. So basically right here, you had this one little down day on Thursday that closed strong. Okay, at that point, I think the small caps were a little beat up. Some high beta tech names were getting beat up. And then, like you said, Friday morning, we were down 12, 13 handles. What did we do? We held the 8-day moving average, which we've been above ever since we took out 2,300. And now today, little inside day ahead of Donald Trump's in front of Congress tomorrow.
And one thing too, there's always something to buy in the market. If they're unloading one sector, they're looking at, the biotechs, the financials. There's always something picking up the slack. The healthcare stocks have been beat up. So you never get those big down days in the market where there's a continuous rout. There's always seems to be a sector in the spotlight. The retail's been beat up. On Thursday and Friday, you got a little bounce in the retail sector.
Let's take a look at RTH real quick. RTH, yeah, look at that. Wow, that's hard for a trader right there, because if you look at the RTH, this closed on the dead lows. But you know what? If you did get out on that Thursday, look what happened here. What do we call this?
Red dog reversal.
Red dog reversal. Went below it, didn't stay below it, and then engulfed it already, and now looks like it's ready to take out this top. So
I'm sorry, I just don't know if that's fair representative of the entire retail sector, right?
Well, you got Macy's, JCPenney's, you got all the
right. Those charts don't look like that, but your Amazon's obviously a big factor in that. But once again, there's just picking up the slack in the market, the underneath demand. You saw from the Trump rally, a lot of people underinvested in the market, got caught blindsided by the election, and they're just trying to play catch up.
And that was right here. And we've been above the 8 and 21-day moving average, which is one of our rules. If we're above the 8 and 21-day moving average, you try and be long. You don't try and just be short. So let's talk real quickly about some high beta. First of all, on your show, what would you say the majority of your listeners do? Are they active traders? Are they swing traders? Are they investors? Or is it just a little bit of everyone?
I think we have a little bit of everyone. I think you have more swing traders. We talk a lot about expanding your time frame.
Right.
The day trading, the machines have really manipulated the market. So we like to focus a little bit longer plays, 2, 3, 4 days. We have some active intraday traders that are playing the hot stocks, but we also have a real nice mix, a crowd of long-term investors that are just looking for opinions, trying to maintain their portfolios, trading ideas. Trying to find the catalyst.
Trying to figure it out. And, we talk about trying to figure it out and knowing your time frame. And recently, I think a lot of the traders or the prop trading world out there has had more success by having a little less shares and giving things more room. And that, again, is why we talk about the 8 and 21-day moving average. Okay, if a market's going to correct and really correct, it's got to get below the 8 and 21-day moving average and actually stay below it versus just going through it, coming back above it, and then resuming the trend. I want to look at the Qs real quickly because a lot of people keep talking about how the Qs are frothy and they can't go up anymore, and they've been trying to short it. But you look here at the Qs. Okay, you start 2017. This was the breakout, and it's been above the 8-day and 21-day moving average for the entire year. And recently, okay, to me also looked a little shaky. What do I mean by shaky? Actually, we had that one down day on Thursday, and now all of a sudden, what did it do? Held the 8-day moving average, and now it's basing again. And it seems as if this little down move wound up being just a day in the life of a trend above the 8 and 21-day moving average for now.
Well, you have the big boys in there. You have your Apple, your Google, your Microsoft. They came out, they beat Q4 earnings. Those are a big percentage of the Qs and the NASDAQ. And
let's put up Apple as Buffett doubled his stake and show that chart.
Much lower, though. not up here at 135, 136. Buffett was buying and originally bought a stake from Icon in the 90s, and then he was adding to it. He's got the dividend protection and stuff. Not a huge dividend, but good earnings, and it supports the stock, the gap and go. People waiting for that gap to be filled, maybe waiting a little while longer.
Well, let's talk two strategies while we have Apple up. Okay, first of all, to start the year, this was your Red Dog reversal. What it did is it traded below 115.43, came back above it. That was one spot to put on a swing trade. Then it took out this small little trend line, which was the highs of last year. So that was like that 118-ish, or at least of the fall. And then if you said, hey, like me, I don't buy stock into earnings, even if it's Apple, because who knows, came out, okay, went sideways. Some strategies could have been buying versus that gap, because if that gap doesn't get filled, it shows you power. Or you could have been a buyer when it took out the high of the candle of that earnings, and then, here we are now. So at this point, still above the 8-day. What's the rule? Above the 8 and 21-day, you try and be long, and now your next inflection point will be to see if it could take out, I guess, the high from a few days ago, which is 137.48.
It took a while to come back and make that new all-time high, right? So a lot of people were expecting it to stall there again, but there's been no stall. It's just been continuation. I was looking at the charts, the 135 level that comes in right there with your 8-day moving average. Where is the resistance? I mean, you can do your Fibonacci projections. 100. JC Peretz likes to mention his projections and stuff, but it's really hard. You think of a psychological number like 140, where maybe an institution wants to unload some stock. But
I put a 142 on my report. I do a report every year with 12 to 14 names that comes out the last day of December, and mine was 142 to 144.
What's your one for Facebook?
Facebook, I actually said to avoid. Okay, the last 2 years I've had it on bull price targets. This year I said the risk reward isn't in your favor for Facebook. But if you look at Facebook, while you're talking about it last week, we had a great trade. You didn't have to worry about a price target. You didn't have to worry about where it was going. All you knew was right here, okay? It was holding. First of all, this was your earnings spot where it failed. So if you got out here, okay, makes sense. It failed at this pivot. It failed at the old highs. As a prop trader, you get out of the way. But then what did it do? It didn't fall apart. It did a Red Dog reversal, went below that candle, came back above it, stayed in the game. And then right here, it was holding in tight and then gave you a nice trade. Okay, granted, Thursday was a little tough. I got out on Thursday because I didn't like the action in the overall market, but now here we are back at highs. And what are we? Still above the 21-day, still above the 8-day moving average. The time that Facebook actually started to get constructive again was right here when it took back all those moving averages from a lower level.
One thing I like to keep an eye on with some Facebook, like let's say you don't go into earnings, you stay out of earnings day. I like to see that closing price on that day. And just to see if it holds that.
You mean the day after?
The day after, if they report at night, the day after, because that's when the big institutions, they're moving their money. Am I in? Am I out? And the closing prices, I mean, the highs and lows.
Let's go back to the chart.
Yeah, the highs and lows, I mean, so little volume is traded in this HFT
By the way,
world.
here was the low of that day. That's why it's your pivot. That's the only thing you know, right? This was your failure here. It didn't have enough to break out, but at that point, Google wasn't breaking out. Amazon wasn't breaking out. So right here, if you said, I'm going to watch 130.40 to see if it gets below, stays below, and corrects with an outside day, or there's no downside follow-through, which there wasn't. So that low, like you mentioned, was very important, but it wasn't a trigger for more downside. It was a trigger that wound up holding the stock and keeping it constructive.
I mean, they're blowing away their earnings reports. They're adding users, Facebook Live. They're always looking into new things. So It's a monster.
So let's close on Tesla, because Tesla, I feel like he probably talks about a lot on his show. This was one of my picks from my 2017 report also, but I didn't think it would go 90 to 100 points in the first month. So that's why going into earnings, which is also one of our rules, we never take stock, or at least if you were investing in it, you reduce a little bit. P.S. Let's just go to the chart where we are now. So I'm sure we see very similar things on this chart, and technically there's a lot to learn from here, right? This was your descending channel. This was for a year. The stock consolidated, did a whole lot of nothing, which is why, I looked at it to be on the report, because I figured, hey, Elon Musk is going to be, on the transition team. It hasn't done anything, automation, electric cars, et cetera, et cetera. Let's see if it could reclaim all these moving averages, maybe buy a little bit here, and then try and figure out if the trend continues. And P.S., it was above the 8-day this entire time, giving you no real money to be short. And then where did it go? It went all the way to what, 287 right there, which was right at the 290 target. But anyway, so at this point, the day before, why not reduce, into earnings? Because it's right near the high, it just won 100 points. Do most people you listen to or listen to your program, do they take stock into earnings reports, or they do some kind of options trade?
They may do a little bit of options. Like you said, going into earnings reports, we have some very aggressive traders. Will trade the reaction.
Although, so after the print, they'll have their levels. That I fully agree with doing it after, not into it, just in case it's halted, or just in case you don't know what's going to happen.
Right.
You're going to do it that way. I like to use options because risk is premium paid.
Right, and we have some active traders in the after hours, and so they'll pick a level. They'll try and interpret a report. Very, very hard to do. I think the thing that Tesla that kind of caught people, what was going to happen with that Solar City deal? I mean, that was, that took that
people
company.
Still don't even really know.
Yeah, and Goldman Sachs got it today, with the downgrade. So you're not going to make a lot of money buying a stock with Goldman downgrade. The only thing I'd be looking at this now, obviously that 180, basically had a 110-point move, 55 of that. Maybe we're getting kind of close to that, 230, 235 area. I like to look at the 50% retracement, see if you can hold it, then resume the uptrend.
Okay, I kind of agree. I know today in my morning note, I said if it opens below and stays below the pivot from Friday, the next spot is a 50-day. I actually had orders to buy like 241.5 down to 238 just in case it went through and reclaimed it, which it didn't. So for now moving forward, I would say to my traders, hey, just say it closed right here. Just to, because it did a little price discovery. Every day now in Tesla is going to be price discovery, because some people are going to say it's going to hold the 50 days. Some people, like you just said, 235. Some will say, hey, it's going to get to the 200-day. All we know right now is it went from 287, and now for the first time it's pausing at the 50-day, which is 242.01. So maybe tomorrow we get a Red Dog reversal through it, which is a point to buy verse, or maybe it gets below, stays below, and then we could try your level near 235.
Just one other thing, a lot of people sitting on a lot of profits in this. You've had the move up from 180, maybe you missed 280, 285, 290, right?
Well, I think a lot of people probably sold into earnings with 80 points, and now they're looking for a spot to buy back. Who the hell is going to stay with Tesla into earnings after 100 points in a month? Or at least all of it, or half of it, or a third. Anyway.
That's what makes a market.
There you go. So, with that said, what we've learned from our experience, how many years have you been doing this?
25.
25. I've been doing it, I think, 15, 16. First of all, it shows you can be done, right? If he's been doing it for 25 years, or I've been doing it for, I think, 17, 18, besides us being old, it shows you that you could last if you evolve with the markets. There's lots of different ways to use resources. You have a radio show that you have guests and everyone tunes in, but they hear it through your voice.
Right.
And here we try and do it with, visuals and morning newsletters besides trading. So, if you're having problems out there, there are many ways to use resources and learn versus just being upset that you read about the market making a new all-time high, or hearing about a stock at an all-time high and saying, hey, it's fixed. How do I get involved? There are ways to learn and get involved with a plan.
Yep. Trade with a plan.
There you go. So at this point, thanks for coming into the studio. I know you have to get back to this trade show, and I'm looking forward to being on your show at some point in the next week or so.
Looking forward to it. Thanks for having me.
All right. Thank you all.